Welcome back to Bitcoin Mastery. In this video, I wanted to break down Crypto Nick's indicators and the strategies that he used to, trade cryptocurrencies. So I'm going to be breaking down each indicator one by one, just kind of explaining what they are. We won't go too in depth with most of these because they are based on calculus-based equations behind the indicators, but I'll try to help you understand in layman terms what each of these indicators are. So I know Nick likes to use the CCI, which is the Commodity Channel Index, okay, and that could be found right here. I'm here on Tradingview. You can click indicators up at the top, scroll down, make sure you're on technical analysis built-ins, and you can find the Commodity Channel Index right here. But basically, the Commodity Channel Index, or CCI, is a momentum indicator. So it indicates the momentum of where the prices are moving based on average prices, okay? And this is, there's a calculus-based equation behind this, but how do you read the CCI? Basically, it gives you a little tan bar right here, and when the line is within this tan bar, okay, that means that we are hovering around average prices. Okay, when we overextend, when we go outside of this tan bar, we see an overextension. Right? We see this line right here. This is we're extending into overbought conditions. Okay, and then if we extend below this tan line, we extend to oversold conditions. And that's basically how to read the CCI. I don't personally use the CCI. I use MACD, which we will also look at. We can also scroll down. So MACD is also, it's a better, in my opinion, I like using this one better. It's a moving average convergence divergence. That's what MACD stands for. Let me go ahead and exit. Actually, I'll leave the CCI here. But basically what this does is it's showing you the trend momentum based on exponential moving averages, okay? All of these indicators that we put on the charts, like the simple moving averages, the CCI, the MACD, they're lagging indicators, meaning that they aren't keeping up with real-time prices, okay? Because the market's moving so fast. But MACD uses exponential moving averages, so the lag is going to be less than if it was just using a simple moving average. So basically, how do we read the MACD? How do we understand it from a trading basis? Well, basically, you see these two lines. Okay, you see a red line and a blue line. And those lines indicate convergence and divergence. So what that means is when they diverge, when the lines diverge, that means there's a new trend that is going to arise, okay? And we'll take a look right here, for instance, okay? When we saw the blue line go up and then cross down below this red line, we saw a divergence in price, meaning a new trend. And this indicates a downtrend because we already reached a top here, and the blue came down below the red. That means there's a bearish signal, okay? And as you can see, based on the price, if we go directly up, we were seeing a bearish signal right there, right? The prices came down because this blue line crossed the red line and continued to go downwards. Now, we did go into oversold conditions, meaning we went way below this pink volume indicator right here, and you see there was a lot of volume, a lot of oversold volume. But when this blue line decided to cross up above this red line, that was another divergence into a new trend, right? This was an upward trend. So we saw a convergence where the prices met, and then a divergence into a new trend where this blue line crossed the red line again, but in an upward trend, and we saw a great upward price movement in Bitcoin. Okay, so basically you can use the MACD as a momentum indicator to indicate if there's a new trend. Is it bearish? Is it bullish? Is the market going up? That's bullish. Is the market going down? Is that bearish? That's bearish. So we can use the MACD to kind of indicate, are we going to continue on this bearish run, or are we going to continue on this bullish run? As you can see right here, we are on a very, very bullish run right now. But this blue line is starting to top out. So once it does cross this red line downwards, that would be a good point for entry, right? If you're trading short or going, not going long in the market, or maybe you want to sell and take some profits on Bitcoin. Once this blue line starts to trend downwards and crosses the red line, you know that we're going to get a bit of a pullback. So go ahead and take your profits if you're day trading. So MACD is a good indicator for momentum. I also want to show you RSI, which is the relative strength index. Okay, and this is just calculating the speed of the change in price. Okay, and RSI is also another momentum indicator. But if we go down here, we can see relative strength index, and again, it's very, very similar to the CCI. That's why I just prefer MACD and RSI. But as you can see, the line right here is above the purple box right here, so that means we are overextended on price, meaning there might be a slight pullback. And as you can see, this line is already coming down, so we might see a reversion to the mean, meaning the price is going to come back within this purple, purple box. And if we do go below to an oversold, that would be a good indicator to buy, because you're most likely going to make money on the way up. So RSI, another good indicator I like to use. I'm going ahead and I'm going to cross these out right here, exit out of those. You can also add simple moving averages. These are simple moving averages calculates the average price, and you could just look at those for kind of an indicator of when to get into the market, when to not get into the market. But again, these are lagging indicators. Let me see if I can find the simple moving average over here. You know what? I'm not seeing. All right, there we go. So moving average. And this is just a simple moving average, and we can adjust the we could adjust this to a different time frame. If you go here, settings, we could adjust this moving average to a either a 50-day or 200-day. I'll just do the 50-day because that's usually the time frame that I'm trading with swing trading. So if we look at this, we see this is a moving average based on average prices, and the prices tend to kind of bounce off this line. So when they do hit the average, they either tend to go below, and then people buy and it goes above the line. So it's just a very simple indicator to kind of look at where the market is moving. As you can see, we are so overextended on this 50-day moving average. Basically, we're trading at prices that are way higher than the average price, and if you look at market fundamentals, the market will always come back to average prices. So you can use this as an indicator to see if you are buying at at an average price or at a discount, or if you're buying in oversold or overbought conditions. So I like to use moving averages, just a 50-day or a 200-day moving average. And next we're going to look at the exponential moving average. So if you want to find that, I would go to indicators right here and just type it in. You could type it in instead of trying to scroll through. So you see built-ins, moving average exponential. You're going to click on that, and then it's going to bring up this line right here. And to edit that, I would go here, put in 12. Okay, so this is a 12-day exponential moving average, because exponential moving averages are a little bit quicker, right? They have they're more tied to closer prices. So if you're going to be day trading or doing very short swing trades, I would definitely use the exponential moving average and do either a 12-day length or a 26-day length. So I'm also going to have to adjust my my candlesticks to kind of a 30-minute chart for a shorter time frame, so we can see where this exponential moving average is going. So if I was going to do a day trade, how I like to use the exponential moving average is that when we dip below the exponential moving average and have a nice candlestick like this one, we usually have a nice run up, and we see kind of like a 3-tier bounce. So it's one run up, bounce off the EMA, another bounce, and then a small bounce right here. Obviously there wasn't, there was pretty good consolidation and more upward trend, but the exponential moving average is it's just kind of one of those indicators that can give you a good entry point. EMA, so we went over the CCI, the MACD, the RSI, the EMA, and the SMA. So I hope that you enjoyed this video. Let me know if you need any help with indicators. Another indicator, a quick one that I want to show you before we get going, is the Fibonacci Retracement, which kind of shows you price levels, good price levels to buy at. So let's go to a longer term time frame. We'll go to the 4-hour and go here, go to the Fibonacci Retracement, and basically this is just showing you based off price extremes where the cryptocurrency is most likely to be traded. So what you're going to want to do is pick the lowest point, the last low, and the most recent high right here, okay? And I could extend this out, most recent high, and this is going to show you the price levels that Bitcoin is going to be trading at. Most likely it will trade within these channels, and when it crosses down to the next channel, you can kind of use this price target as an entry point or an exit. So I hope you enjoyed this video. Take care.